Hey, welcome back to the channel, friends. If you're new here, we're tackling a question that many of you have been asking about ETFs versus index funds. What's the difference? Are they the same thing? And most importantly, which one should you choose? Now I know what you're thinking. Another finance video, huh? But trust me, this one's going to be fun. We're going to break it down, keep it light, and maybe even throw in a joke or two because, hey, finance doesn't have to be all spreadsheets and taxes, right? Before we dive in, make sure to hit that subscribe button, give this video a thumbs up if you're enjoying it, and most importantly, share this with a friend who still thinks ETFs and index funds are the same thing. You know who they are. Let's start with ETFs, exchange-traded funds. It's a little like a party you didn't know you were invited to. You're in the stock market, but it's not just one stock you're investing in. Nope. An ETF is a basket of stocks, or sometimes bonds or commodities, that trades like a stock itself. Imagine this. You walk into a grocery store, and there's a basket labeled Apple, Tesla, Amazon, Microsoft. You don't have to buy each individual item. You can just grab the basket. That's an ETF. It lets you invest in multiple companies or sectors all at once. Here's how it works. ETFs are managed by asset managers, and they can focus on a specific sector like technology or a broad market like the S&P 500. You buy shares of the ETF and your returns will be based on the performance of the companies inside it. And since ETFs are traded on stock exchanges like individual stocks, you can buy and sell them anytime during market hours. So why do investors love them? Well, for one, diversification. When you buy an ETF, you're getting exposure to a whole bunch of stocks or assets without having to pick them individually. Plus, they're liquid, meaning you can easily buy and sell them. It's like a mini portfolio in one investment. But here's the thing. Just like picking the right party to attend, you want to make sure you're choosing the right ETF. Some are low cost, while others charge a bit more, and some focus on specific industries, while others give you a wide-ranging exposure. Okay, now let's switch gears and talk about index funds. If you're familiar with ETFs, you've probably heard about index funds, but what's the difference? Well, an index fund is similar in that it gives you exposure to a basket of stocks or other assets, but there's a key difference. Index funds are usually mutual funds that track a specific market index, like the S&P 500. Unlike ETFs, index funds aren't traded throughout the day on the stock market. Instead, you buy shares in the fund at the end of the trading day at a price based on the net asset value, NAV, of the stocks in the fund. Think of it like buying a ticket to an amusement park. You can't just go on the rides whenever you want. Instead, you have to wait in line. So if you're into immediate action, the fact that index funds don't trade during the day might sound a little like a buzzkill. But hey, they're also a lot less fussy in terms of how you buy and sell them. Like ETFs, index funds are usually passively managed, meaning they're designed to track the performance of a particular index, like the S&P 500, NASDAQ, or Dow Jones, instead of trying to beat the market. You don't have a fund manager picking stocks for you. This thing is all about following the market's lead. So, here we are. Let's break it down. What are the big differences between ETFs and index funds? ETFs. Traded on exchanges like stocks, buy and sell anytime during market hours. You get real-time pricing, so it's more flexible for people who like quick action. Index funds, not traded throughout the day. You buy them at the end of the trading day and you get a price based on the net asset value, NAV. ETFs are like those late-night taco trucks. They're open and ready whenever you want them. But index funds, they're like your favorite breakfast spot. Only open during certain hours, but their omelets are always solid. ETFs usually have lower expense ratios, which means fewer fees. But you might have to pay a commission fee depending on the broker you use. Index funds also tend to have low expense ratios, but you might see some higher fees for certain types of index funds, especially if you're working with a broker that charges higher fees for mutual funds. Think of it like this. ETFs are the fast food of investments, low cost and quick, but you could still end up with a fee on top of your meal. Index funds, they're a little more like your sit-down dinner, still fairly cheap, but the service might not be as fast. ETFs, generally more tax efficient because they're traded like stocks. They're structured in a way that allows you to avoid paying capital gains taxes until you sell them. Index funds. While still fairly tax efficient, index funds can be a little less efficient when it comes to capital gains, depending on how the fund buys and sells stocks. ETFs, the cool, tax-smart friend who always knows how to avoid getting in trouble. Index funds, still pretty tax efficient, but they might not be quite as good at dodging those pesky taxes as ETFs. So now that you know the differences, the million-dollar question: which one should you choose? Well, that depends on you. If you're a day trader or someone who likes to buy and sell investments quickly, ETFs might be your best bet. You'll appreciate the ability to trade throughout the day and react to market fluctuations in real time. If you're a long-term investor who's not so worried about daily prices and just wants to track the market over time, index funds might suit you better. They're still cheap, still diversified, and you don't need to worry about constantly checking the stock ticker. ETFs are great if you want more control and flexibility, while index funds are perfect for hands-off investors who just want to invest and let time do its magic. Okay, if you learned something new today about ETFs versus index funds, hit that like button. We all know you're a fan of knowledge, and we're here to keep bringing it to you. And hey, if you've got that one friend who's still mixing up ETFs with index funds, share this video with them. Maybe they'll thank you later, maybe they won't, but at least you can rest easy knowing you helped them get their investing life together. Don't forget to subscribe for more tips and drop your thoughts or questions in the comments below. I'll see you in the next video, and remember, the key to investing success is making informed decisions. So keep learning and keep growing. Catch you later.